select your market carefully. Is the one thing I would say. It's not only just the market, physical market, but also cycle of the market. It's kind of like these analogy of like what they say, like the Roman warrior that they will in Chinese saying it's like you practice for 10 years for to prepare for a single battle.
Hey everyone, it's Agostino. Building a real estate business is one of the best ways to achieve financial freedom. Now, the problem for most people is the money. Specifically, they have a hard time sourcing the equity they need. Now, this could be overcome by practicing that overall discussion to show people how they can increase their wealth, improve the cash flow, and reduce their taxes. Now, today's guest understands all this, as she has an impressive track record of investing in real estate syndications. Now, as a former product manager in the tech world, she went from reading BiggerPockets blogs and all that to owning over 1,000 units of multifamily apartments. Now, her 100 million multifamily portfolio assets are in Texas, Arizona, and Washington. Now, today, she is passionate about teaching others to do the same thing that she has done. She and her team focus their time and expertise on helping the typical 9-to-5er quit their job in 10 years or less and become multifamily entrepreneurs. Now, with all that, I'd like to welcome Elisa Zhang to the show. Elisa, thanks for coming on.
So thank you so much, Agostino. It's so great to be on your show today.
Yes, excellent. I've been looking forward to this for a while, so it's going to be great. Now, guys, if you like what Elisa has to say, you can reach her via her contact page at easyrealestate.rocks. Okay, we're going to include a link in the description. Okay, Elisa, go ahead and tell listeners a little bit more about how you got your start. Tell us about your journey.
Yeah, definitely. Thank you so much for giving the opportunity. So I started like regular Asian people, as you can see, kind of. And our family, basically, our path was determined for us, like a lot of other Asian families, that you're basically supposed to go get a job, and the job's limited to engineering, doctors, or lawyers. And so I chose to be a computer engineering when I went to school in IT, and then ended up in Seattle and worked for a Fortune 500 company at the time. It was really rewarding when I first started doing the job, but I just feel like there may be something out there. As a little kid, I also always did more entrepreneur type of stuff. But I even got beaten on my head about it because I grew up in China and the communist country just kind of didn't really allow that. But fast forward, after a couple years doing the rat race, and then I feel like, okay, there's more that's out there. But I didn't understand what it is. And then 2009 hits, so we bought our first condo. There's all reasons not to buy condos, but we bought a first condo on the short sale. And basically, that's our first investment. And from there, I wasn't really serious about it because there wasn't really a very clear motivation why I want to do this. I just knew that I need to create some extra income. So from there, we bought single families, a few of these. Did my husband is actually pretty handy, so he fixed up the things as we go. So we went from condo, which requires no work, slowly down to things that requires more work. And so from there, my daughter was born in 2015. So that really changed my perspective. If anyone who has kids, the minute that your daughter was born, maybe not the minute, maybe it's a week after, there's a bonding moment that happened. I really remember this very clearly, is I didn't want to go back to work. And I was staring at this little girl in my hand, breastfeeding her, and was like, hey, like, I don't want to go back to work because I wanted the flexibility to spend time with her. So that really hit me really hard. And then, of course, when the maternity leave is up, you have to ultimately facing the decision to going back to work because I'm the single income person in the family, so there's no option, right? So I gotta go back to work and make the dough. And that's when I frankly start researching about how do I quit my job sooner. So I typed in how do I quit my job sooner, or how do I retire with real estate investing? Because that's kind of like the only thing I know how other than working my job at the time. And then BiggerPockets showed up. So did a lot of research on BiggerPockets, basically devolved all the blog information, the right information or the wrong information, because it's all free advice. Actually met one of my current partner online back then. We both, just started. and really just kind of met a lot of other people, went to meetups, and then learned a lot. So there was a couple years of just absorbing information, but also doing things. So I was like, hey, we're doing this all wrong. We're buying single family. There's a lot of equity. I even put them on 15-year mortgages. Don't do that ever again because there's barely any cash flow. And then I basically did 1031 exchange into fourplexes. And these are some really rundown fourplexes that we renovated ourselves, which another thing I don't recommend doing, especially if my husband kind of does more the handyman jobs. I manage the tenants myself. You learn a lot from there, but it's also putting a lot of stress on the relationships too, especially have to watch after kids as well as the W-2 job. So that kind of really launched us into the multifamily arena. After a couple of fourplexes, I'm always someone who gets bored with things very quickly. So then I'm like, okay, we got this fourplex down. Like, now what? What's the next challenge? So I've been listening to a lot of podcasts. And then from there, learned about something called a commercial multifamily, which means 5 units or more. And then in order to scale more, that's the direction where it needs to be. So then did another round of lots of education, spent a whole year going out to meet up, looking for the deals. And at that time, the deal kind of dries up in the Northwest over here. So I actually went out, not in Seattle, but went to Tacoma, which is an hour away, bought a 12 unit, and then brought on a partner. And then because I also knew that I couldn't scale if I just managed the property myself. So hired a PM company and learned all that ropes, and learned how to hire, fire property management companies, and then basically put some metrics in place and try to make it better. So fast forward from there, after doing a couple of small multifamily, then I get bored again. Um, Also because the deal was kind of running out. I was spending, a whole year going to all the meetups locally, like 3 times a week, like really hitting it really hard, and not finding any more deals. Because you go to meetups and you're like, oh, it's just another fix and flip network or this and that. So I decided to start going to national conferences. Eventually, got myself a coach. Getting into the program, and that's where I really accelerate because the people makes a huge difference. You can learn all the knowledge you want to, but it's the people who you networks makes a huge difference. You see other people doing the same thing, then you learn from osmosis, and kind of got in the game. We started doing some passive investment, and like 6 months later, we got into our first syndication deal by bringing capital into a deal. Also, obviously, doing some other asset management items, and then from there, kind of grow. And then now, due to accidents and this and that, partnership changes and etc., we had to step in on a few of deals as asset managers, and that taught us how to asset manage property remotely with our good PM team. And then after a while, we felt comfortable to do asset management ourselves, even though we don't live in the state, and putting the deals together. So now we actually asset manage our properties as well, as being asset managers, on all that area. So the rest is kind of the history. After the first syndication deal, we just kind of rinse and repeat the same thing. But every time you kind of learn a little bit more. I went to this like presentation. One thing that this girl was talking about is growing your circle. So you kind of like do your small circles and you kind of grow a little bit at a time and just want bigger and bigger. Next thing you know it, you're like there. So that's kind of our story in a nutshell. Yeah.
Well, I'm certainly a big fan of building out your circle, and the bigger your circle of influence, the better deals you're going to get your hands on, the more people they can get in front of. It's going to help you out in all facets of your life, not just the deals itself. It's helps you out everything. So, but there's a lot to unpack there. So it's interesting. You're first generation here in the States, right?
Yes, yeah.
Yes,
I
me too.
moved here when I was 17.
Yeah,
Yeah,
so I was born in Canada, but man, it sounds like our parents did the same sort of thing. You go to school, get good grades, go get a job, that kind of thing. That's what was expected. It seems to
yeah.
be for a lot of immigrant type of parents, right? So entrepreneurship certainly has been very very good to us.
Yes,
Very good size.
absolutely. Yeah, absolutely. So
Yeah.
I immigrated into Canada actually when I was 17, and through my dad, and they're zero generation immigration, obviously, moved over there. Yeah.
Yeah. Yeah. Nice. Nice. So I would venture to guess that when you first heard the term commercial real estate, that introduced a little bit of, I'm not going to say fear, maybe it was fear, I don't know, but were you afraid when you first tried to understand or get your head around commercial after doing residential? You did a bunch of residential stuff, now you're going to do commercial. Did that put you off at first?
Not really. I think for me, I always the type of person who kind of do stuff first and probably do stuff too soon than just kind of getting the education. I usually have a goal set in my mind by just listening to things, idea just kind of appears to me. And then I will decide like this is the direction where I want to be. And then putting all the steps in to kind of get there. That's kind of like my thought process. So for me, it wasn't, and also like I mentioned, a circle before, I was at the level where the circle has grew to a certain level where the next thing to do is the commercial. It was pretty natural to step into it. I would say this going into the commercial area, like the people who I imagine would do the business for is certainly not like someone like me, appearance wise. It's probably someone like you. And so, like I see like people who dress super nicely and they're like super, professional and all that. Not like a West Coast person like me. I usually wear flip flops everywhere, you know. I would say that was a little nuance there, because you got to carry yourself professionally. Yes.
Yeah, yeah, yeah. A little different. Yeah, I guess it maybe a little different out here. Yeah. So now, when some of the challenges you might have faced when you were first syndicating your deal, what did you face back then? I mean, I would imagine that first finding your deal, but then syndicating it might have been a little bit tough, right?
Yes, so it's actually really tough, Augustino. The first deal is always going to be the hardest. In fact, our first deal didn't close. We were actually supposed to be asset managers from the get go. So we found this deal in Mississippi through a networking opportunity. I met my partner who lives in Mississippi. That's something I always believed in is like you have to have a partner who's actually living there, at least from the get go. And then later on, if you build the network, so you can kind of like maybe if it didn't quite work out with the partner, then you can go your own ways and this and that. But to get into a market, I always believe that there's a local power over there. So we basically got this deal in Mississippi, Vicksburg, out of anywhere. And we were actually, so there's a couple goals I set out to do on this, which is I want a agency loan and I want to do a syndication, even though I know I could have probably just put a few partners together, but that's stuff that I want to learn. So that's kind of how I set it up, the whole thing. So we actually sourced the deal directly from the owner. My partner did. And there's a lot of lesson learned over there. The owner is a grumpy 80-year-old man who is a very southern traditional. So having two ladies doing deal.
Hey, Agostino here, and I would love to connect directly with you. Text the word books to 202-410-4202 to receive weekly book recommendations from me.
With him, he's a little, you know. But anyway, so we carried through the whole deal. It was our first syndication deal, so raising money was really difficult. Um, Getting through agency loan because we have no prior experience with agency loans, so that was also another strike against us. So it was really difficult to get that. Finding people who can help you co-sign a loan, etc., was also difficult. And so everything is difficult. But we eventually got through all the whole hump. And then the day before the rate lock, that's 40 hours before the closing date, when our lawyer, also in Mississippi, it's not there's no title company over there. It's basically a lawyer has to do all the work. Our lawyer is as up to standard with the agency loan. So she missed the deadline like by one day. We went back to the seller, asked for an extension for one day, actually just like a couple hours, and then he decided he's gonna hike up the price 10%. Obviously, we can't do that. We have to walk away. Pretty much, this never happens. So it's a very rare story. So don't make that discourage your journey. But basically, we have to walk away and actually refund back our investors' money. So that was that. So that was kind of like the first syndication. But I want to share that. And then 6 months later, so whatever that you're doing is paving for your way. So even in this failure case, we had all the money raised, but 6 months later, we got into a syndication deal because we brought that capital that was pent up into that deal. So that's how we actually got into our first real syndication deal. So that's kind of like the full story. But we learned so much during that whole transaction. I see this all as failure is actually positive that paves the way for your success in the future.
Yeah.
Yeah.
So now, when you went to go raise that capital, and as your first time raising money for a deal, how did you pitch it? How did you put something? How did you put a package together to really present to these investors? And what sort of investors were they?
Yeah, so friends and family really. And when people say, we did a 506B, so it's really friends and family. I would say I highly encourage people when they first start, they should look at 506Bs instead of jumping into 506Cs, which allows you to public marketing the deal. Because people have been tracking my success in a fourplex in a small apartment space. We do very well on these deals. And we basically kind of be sharing this on and off with people, but we weren't like public advertising it. Also, the meetups I went to, again, like all these work that you did today, you feel like, oh, is that waste of time? Going to a year worth of meetups, like 3 times a week, that's quite a bit. And you get to know a lot of people. You start talking about people, asking what you do. Well, I do smart apartment buildings and this and that. So people start tracking what you do. And that's my first set of investors. So colleagues, college friends, and people who I networked in these networks. Because by then you have already networked with a few of these people for a whole year that you met them. And then that's the right time to do it. I honestly didn't have anything fancy at the time. I don't have a mailing campaign. I don't have a website. I don't have anything. Just straight good old school phone calls because you have that tight relationship. You give someone a call, talk to them about it. We did put a very basic package together in terms of showing the picture of the property, the market, the area, and the numbers, our underwriting numbers. So I was able to kind of put together a Excel sheets with my own underwriting model with a 5-year modeling and all that sort of stuff.
And I'm guessing you also put like your bio in there, the bio of the property manager, like everyone else involved
Yeah,
is in the deal,
yeah,
right?
yeah. The people as well, which is very simple at the time. It's just me and Crystal, my partner over there, and our property managed company comes with Crystal. He already managed a few properties for her on the smaller multi side. Yeah, and it was only a 50-unit property, so it wasn't like anything large. You can kind of reuse some of the people she's already built off the ground. Yeah.
Right. Now, how were you able to really bridge that gap for some of those folks? And I mean, it sounds like most of them were friends and family, so it might not have been too difficult. But did you actually have to talk to someone who'd never invested with you before,
Oh yeah.
that you didn't
I mean,
really know? Like
all
how?
these people have never invested with me before. I only took on one partner on my small apartment venture, right? Obviously, he is right away in because all these results that we did, we doubled his money and then less than 2 years and all that sort of stuff. So he's like, oh yeah, I'm in, right? So that's the easiest investor. But everybody else was difficult. It takes multiple conversations, helping them understanding multifamily, for some people who are familiar with the small multifamily, so these are a little bit easier to convert. Actually, the hardest of people to convert is your friends and family, like true friends and family, like college friend who you haven't talked to for a while. And then it just has to be the right timing. They're like, oh yeah, we were thinking about diversifying in real estate, but we have no idea what to do. So you have to educate them not only on the investment, but also multifamily. Why multifamily versus single family? That was a big kind of hunch to get over. And then for some of these people, they still didn't understand. So there's a lot of no's, and then there's a few yeses. And then so that was a whole process. It takes a whole month for us to kind of get that going. Now, hindsight, if you knew you're gonna do syndication, you would probably prep it beforehand. You show them like these are the stuff that we want to do. And also passive investment is a really good bridge gap over there. We didn't passive invest before that deal, right? So you didn't have really exposure or things to show what passive investment looked like. But once we got into July, that becomes easy because we had that experience previously. We also have pent up money, but also we passively invest it, and we can show them like this is what you expect, that this is all that sort of stuff. So that becomes a lot easier process. Yeah.
Yeah, well, it also gives you an opportunity to understand what it's like to be an investor as well.
Right.
Like what are the
Yeah.
expectations as someone that's going to put money into a deal? What does communication look like? And provided, of course, you're partnering up with someone that's a pro at this. It's that part is kind of important. But
Yeah.
yeah, because that way it kind of helps you outline what the communication needs to look like with your LPs,
Right.
right?
Right. Exactly. Because then you went through a process and you understand the timing of everything. So it's a very interesting aspect to have done this actively. On the other hand, but then like when I passive invest, I'm like, oh, there's like the whole system over here, like that as a passive as a consumer of it. So what we were doing before was really old school. Yeah.
Yeah, yeah. Well, and I think another major point to highlight here as well, when you found this deal was just you already had the people lined up. You already knew who you're gonna hit up for the cash to get that deal funded. Meaning, you spent time prepping the network probably a while in advance before you actually presented them with this deal, right?
Yeah, unconsciously. Because again, it kind of goes with my nature of like, hey, we're just gonna dive in and do this. You're like, oh, now we have a deal. What do we do? Like, go raise the money, right? So again, if I were to do again, then I would say no. You actually have to prep the people. If you know this is the direction where you want to go, you don't even know when your first syndication is gonna be. Chances is gonna be it's probably gonna be in 6 months to a year from the minute that you start like diving into all that stuff. So during that time, you don't just like sit around and do nothing, but you kind of share your learning, you kind of share like all that sort of stuff. And if you passively invested during that period, you also share what you have learned from passive investment. So that helps prepping your networks and it becomes really easy. Now, when we raise money, it's basically you build all that relationship. People will give you calls. I answer investor calls like a couple of them a day. And then when I actually have a deal, I just send out an email and and then the process kind of take its place. You still have to talk with people, but literally, some investor that has repeatedly invested with us, they just like, oh, just another deal, looks good. It's very very simple. Because if you did all that groundwork, you spend a whole year doing the groundwork for that deal for the next deal, or whole quarter, whatever. You would continue and pump out the content, pumping out all the information for your investors, gathering new investors, and then when it's come to the battle, that's just done. It's already done. That's the easiest part. It's kind of like these analogy of like what they say, like the Roman warrior that they will in Chinese saying it's like you practice for 10 years for to prepare for a single battle. That's kind of how that goes.
Yeah,
Yeah.
no, that's a very good analogy because that's how it works with this business. So probably one of the biggest things then, what it comes down to is preparing the network, getting them ready. So when you do get that deal, you're ready to execute. I think it's probably one of the biggest things that are contrary to many of the people out there. They'll just say, "Go ahead, get a deal, hurry up, buy a deal," and people don't spend any time talking about it takes time to really make your pitch, make sure it's nailed down properly, getting in front of people and getting them to believe in you as a person who's going to be managing their money. That's
Right.
that's totally underestimated. Totally underestimated.
Yeah,
And it's
absolutely.
worth it's worth noting. It's worth
Yeah.
noting.
Yeah,
Yeah,
that's why in all our presentation for a new deal, the first couple slides are always introducing the team. Of course, we have our investor that is a repeat investor that they always come and like, can we move on? We know everybody, like but there's always like a new investors. They need to feel comfortable with the team. I mean,
yeah.
that's ultimately just it. It's a people's business. Yeah.
And on that note, maybe let's talk a little bit about that. The importance of partnering with the right people. I know that you're doing a lot of out of state investing from where
Yeah.
you're at. So, what are you looking for in a partner, and what are they looking for in you?
I think that you have a understanding where the team is going. just as a whole is very important because oftentimes when you first start a project, you're eager to get into your first deal, and it's actually the right time to take a step back and understanding, really do a lot of homework, to do a lot of networking, spend a lot of time with your potential partners, and see if these are folks that you can talk to. Literally, one of the metrics I put in is like, can I talk to this person day in day out for hours, like each day? Because sometimes you need to, especially during the first chunk of acquisition, you need to be able to count on your partner to deliver what they deliver. And time is the essence. So a lot of that you need to be able to trust that person completely, take something and run with it without you overseeing, because you be busy doing some other stuff. And then the second part is being complementary to each other's skill set. It wasn't that important to me before, until we did get into some partnerships where everybody is working really hard, but there's something that wasn't quite working, right? And then you feel like, oh, in the hindsight, looking at these partnerships, it was because people all have the similar skill sets. It wasn't complementary. So, someone has to pick up certain things that is not nature to them. So then that becomes a drag for them, and, create a this and that issue. It wasn't like super a lot of issue, but you kind of just always had the back of your mind. You're like, oh, why is this so hard? So whereas a complementary team like the team I put in Houston right now, in one of my deals over there, like I knew Mario for like 3 years, on and off through different networking, and then she's very detail oriented, which is entirely opposite with what I like to do. I like to kind of like go go go, like let's get the stuff done, like this is what, and then I need to put like the teams in place and looking at the larger pictures. And then she loves like taking detailed view on like one fine things that really make it like really perfect. That actually works really well. Like not until like had that relationship, then I'm like, wow, this is like a partnership that's really working. And then you have other partnerships where each person has to play a role inside of the deal. It's because it is limited amount of people you want to include. So you want to make sure everybody plays the right deal.
Yeah.
And the other third thing is, I would say some sort of loyalty is in there too. Like I do partner with different partners, but I do put boundaries in them. At first, when I partner with people, I was just like, "Oh, I'm just gonna get into deals, right?" And then I realized it's not like that. There's certain exclusivity, there's certain loyalties, there's certain relationships that you're building, very long term relationships, and then your team as a flying wheel is just gonna go better. Without that commitment to each other, it was hard to build to the next stage where you need to take two deals at a time. How can you count on the other person if there isn't a relationships or some sort of exclusivity that build into that relationship? It didn't mean that, hey, you can't do any other deals, right? But there's a certain parties, there are certain royalties that kind of builds into that. So you can count on the person should you have a deal come in, or should you have like other things that is going on. Yeah.
Yeah. Yeah. Well, there's a lot to unpack there too. Something to highlight, something that I look for is, I'm a high action person just like you are. The
Yeah.
last thing I want to have is another high action person like me as my partner, because we're going to miss a lot of stuff.
Right. Right.
So,
Yeah.
but that's absolutely huge. That's absolutely huge right there.
Yeah.
But another thing that I found in my partners is, I've made one mistake on a partner, and that is they're flaky. They're flaky. They
Oh,
say they're
yeah.
going to do something and they wouldn't do it.
Yeah.
And there's ways of testing that. There's ways of testing that. It's just, hey, set up a time to meet at 1 o'clock online on a Zoom call. If they can't even do that consistently, then
Yeah.
you probably have a flaker on your hands, and you shouldn't do business with them.
Yeah. Yeah. Or they just super unorganized, like
Yeah,
I'm actually super not organized, and people sometimes are surprised because I can skill myself up to be organized, but that isn't nature for me. So when I have to do that in partnerships, we mentioned before, we were very similar. So I'm like the most organized person in a group. You don't want that to happen, but I'm the most organized person in a group. Then I feel like I have to go spend so much more time to go do that, right?
yeah,
So versus in this case, like I know like Marius got my back. So if I'm not super honest, she's like, oh, let me just go do this. So I'm like, good. She's like, I love doing this. And I'm like, really? Like, so like when you find the right partner, you're just like, does that type of person actually exist in the world? Which is entirely opposite from who you are. Yeah.
Yeah. Yeah, that's right. That's right. No, that's one thing that I learned myself too, is to try to find someone that complements you and you complement them.
Yeah.
And another thing that I often tell my students anyway is bring something to the table that the other side just doesn't have.
Yeah.
Maybe you're amazing at finding and underwriting deals. Not that they're not good at it, but you're better at it.
Right.
And if you can bring that to the table, it's a match made in heaven. It's a match made in
Yeah.
heaven right there.
Yeah,
Yeah.
absolutely. I love what you just said over there, is bring something to the table. Like nobody's perfect. Nobody knows what they're doing, especially when you first start doing the deals. So what I do is I bring 200% to make up for whatever I think I don't know. Even now, when I'm sitting at the fence, where like, oh, this person is a little bit more experienced, that I don't lay off the gas. Like I still go 200%, because like you said, you have to trust your partner's work ethic. So you have to strive to be the hardest working person inside of your group, because you're hoping your partner is also as that. So I think the work ethic part that you touched before is absolutely true. That's a given. I think if you can't be doing stuff, times that at essence, you can't like deliver stuff when you need it to be, then it's going to be a hard journey to be a syndicator, because you have to respond to your investors anytime you need to, and then you have to be able to respond to changing situation anytime, and there's no holidays on that, because if an state emergency happen, like Texas storms or whatever, you have to react to it, and then be able to kind of put 100% on that.
Yeah. Yeah. Now let's talk about your deals really quick, because you've done a bunch of different deals now. You've done the small ones, you've done the large ones. Now, why are larger deals easier to manage than the smaller ones? Love to get your take on that.
I actually not sure. I know like all the guru talks about the larger deals are better than the smaller deals, the easier
Yeah.
to manage. I would say from a who has never done a deal before perspective, if you have the right team in place, your larger deal is easier. But like, because my background is starting from the smaller property, so I put my hands in the harder stuff already. Yes, I think the larger deal could be easier, but also could take longer time to turn, like turning the Titanics, what I always say.
Mm.
And then the smaller deals, if you know what you're doing, you can also reach pretty success. But there's going to be a lot more time put in place. So I would say in general, the larger deal is easier because the teams that you put in place might be more professional. Like if giving an example, going to a Phoenix market, like the larger players, they will have a Chinese manual of what renovation stuff that you want to do, the scopes, you can look at it, just modify it, it's all good, and then they go in the off run with it. Whereas I work on a few small properties in Phoenix by choice. For that, the PMs that work with, they don't have a Chinese menu, like, so it's a lot more involved. Like you will have to come up with that with the experience, and like gladly I got examples from the larger properties that I can like implement the same process on the smaller properties, but you have a lot more involvement in the smaller property. One reason the large property is you have an on-site manager. If the larger it is, you can hire a better payroll person. So let's say if you have 100 unit.
Hey, Agostino here, and I would love to connect directly with you. Text the word books to 202-410-4202 to receive weekly book recommendations from me.
Versus 120 unit. 120 you need someone who's really experienced to be able to has the capacity to do the whole 120. 100 is usually the magic 75 to 100 for one person on site. But you can only afford lower salary, right? Because it's each unit has an income number. And then the bigger it is, to a certain extent, I think I found very senior on site can probably scale to 135 unit per se. But once beyond that, it's a little hard. But if you have 120 unit, you have 20 more units that's making your income, and you can pay that person a little bit better, and then that person's going to deliver a better results for you. So I think that's just the skill. And then on a smaller property, you really couldn't have a on-site, because on a 20 unit, if you have an on-site, like forget it. Like all your income is going to go pay for that person's salary, right? So you just can't afford it, which reduces the amount of eyes and ears that you put on these smaller property. Now we have put in some mitigations on our small property now, but that's the accumulated experience, how much experience we have now. We would often buy them in scattered, like basically we would try strategically look for small property in the same like 15 minutes drive range. So then you can afford maybe one outside person to manage all these 3 properties, right? It is still inefficiency on driving back and forth and this and that. It's still not the same as on-site. And then we will also be able to give concessions or identify tenants that may be a good fit as like the groundkeeper or whatever, so keeps an eye on the property without you having on-site. So I would say for someone who started the 100 units easier, because in some ways it is institutionalized. The whole process is already put in place, the accountings and all the other stuff. Whereas on a smaller property, you have to roll up your sleeve and know a lot more in order to perform better.
Yeah. I think that's probably the biggest hang up with the smaller ones. Absolutely, it requires a little more hand holding,
That's why people like to talk about institutional grade assets, right? Like institutions are sitting in New York somewhere managing a number, and then where PMs are just like remotely doing all the stuff like based on their direction. And we're talking about REITs and stuff. That's like 300 units or so,
Yeah, that's right. Well, we covered a lot of stuff today. So for someone listening right now, maybe they listen to our conversation here, what sort of bulletproof advice would you offer them as far as next steps?
I would say select your market carefully. Is the one thing I would say. It's not only just the market, physical market, but also cycle of the market. You mentioned, like I mentioned, we made a lot of mistakes in investing, but ultimately all these investments made money, and not because like I know the most, is because we invested in the right market cycle. 2009, it's like you buy anything would somehow made money in given the years that's to come. So now I think our market condition is a very interesting space. You also have to look at what other capital is doing, like what is the bond market is doing, what is the macro marketing is doing. So people always say like, oh, the housing price is gonna saturate. Maybe so with single family, because there's a lot of unemployment rate. That's something to kind of watch out for. Does not reflect the economy currently, like the stock market, etc. It's not reflective, as well as the housing market. It's not reflective of the true economy, how it's doing. The true economy, how it's doing, is unemployment number, a true unemployment number. Right now, the COVID created a lot of that, the temporarily loss of job. So you have to kind of figure out what is temporary, what is permanent. But I think the number is going to be a lot larger. It's going to be way smaller than what is it right now, because it is inflated by the COVID. But it is going to be bigger than like a normal economy for sure. So you have to keep that in mind when you invest into a market specifically, to see an inbound migration pattern of that market. Is it a growth market? You want to be in these type of things. And then you want to not only just looking at, is it growth market right now, but what kind of industry is in there? Like, how is it looking in the 2 or 3 years time? And also looking at capital market, you also have to kind of look at, okay, the stock is going kind of crazy with all the GameStop, that's kind of story, and government's pumping money. So is inflation gonna happen? What is gonna do with the inflation? And we all know when inflation happens, everybody wants to invest in asset or precious metals or any of that. So that could potentially create a boom in terms of multifamily specific area. And also foreclosure that is happening in the market. Not yet, but there's a slew of foreclosure that is coming. Some people are just taking advantage of the program, be able to kind of defer their foreclosure until September. I think that's the new rule. You can defer a foreclosure until September for single family homes. But some people just simply can't afford their home. So this is going to all catch up at some point. So when the single family prices goes down or people losing their home, they need somewhere to live. So again, that's why we're very bullish on multifamily. This is still the sector that we really believed in. I feel like the hardest on the multifamily has gone. It's already over or almost over with the COVID moratorium. It just only takes so long. That's been actually pretty tough in terms of collections and all that, but we all survived. So that attested how strong the asset type is. And then so the type of asset that you invested in, the market, the migration pattern, and the cycle of the market, all that you have to kind of watch it, and then dive into the specific submarket that you want to invest in very deep, like very very deep. Like Agostino, I know we talked about before. You go into market super deep, so you have all that knowledge in that particular market. So I think that is very important. Because in 2009 you can invest anywhere, but now it's not 2009. It's kind of more like you're on not the top of the cycle, but you're
Right.
on the hill. Yeah,
That's right. And that's happening now. But yeah, 100% agree. You really have to have a lock on your market and really know what's going on, or all intricacies of your market, and
yeah. And
and
then
that's
the other advice
the
I would give
focus.
it, is building relationships, long-term
Mm,
relationship. Focus on the relationship long-term, as I mentioned before. Even though you feel like you're wasting your time, maybe building a relationship was waste of time if you have a short sight to it. But if you just trusting people and letting that building long-term relationship process happen organically, um, a lot of that benefit is going to come couple years later, maybe a year later. I have investors that I would talk to a year earlier and totally write them off, and a year later they're like, we did everything you told us to do, like now we're investing. So you never know, just like building that relationship is very important.
yeah, and staying in touch with them, updating them all the time. Yeah,
Yeah,
it's huge. It's
yeah.
huge. All right, well, all of it, great stuff, great stuff. Now, guys, if you want to reach out to Elisa, you can reach her via her website at easyrealestate.rocks. Check out her stuff. She's got a lot of great information on there as well. She's got some great courses for you to check out too. So go ahead and go and check out her website. I hope you got some insight on how you can open a discussion with investors and really some pointers on how to raise capital. So thanks for tuning in, and I'll see you in the next episode. Take care.
Hey, Agostino here, and I would love to connect directly with you. Text the word books to 202-410-4202 to receive weekly book recommendations from me.